one of the crypto industry's biggest wins in 2025 was without a doubt the passage of the Genius Act out of the corridors of Capitol Hill. The bill established a regulatory framework for stablecoins, but the bill does not allow banks to pass on interest to stablecoin holders. And now there is a newly emerging battle brewing between banks and crypto exchanges over the important legislation. Banks do not want platforms like Coinbase, Gemini, Kraken, and others to offer rewards through third-party structures. Ray Salmond joins me now. Ray is head of markets for Cointelegraph. Ray, thank you for being here. Happy New Year. Please help me understand what is happening now. We just brought our viewers in the last segment the updates from Brian Armstrong. He posted onto Twitter, X, excuse me. We won't let anyone reopen the act. It's a red line issue for us. That's Armstrong's take. What is going on here? Can help me get smarter about what exactly everyone's fighting about?
I like Armstrong's take, and I was of the mind that competition was good for capitalism. So it's surprising to see banks pushing back against against depositors receiving interest on their deposits, right? Like that's kind of like the basic function of banking, is it not? So I think Brian's or Armstrong's point is simple. The legislation is already finished, and trying to reopen or revise it is disingenuous, and it sets a bad regulatory precedent for crypto going forward. What crypto really needs most, and Armstrong understands this, is it needs clarity, and a clear framework gives traditional finance and stablecoin issuers and blockchain companies the confidence to deploy capital with conviction. So the argument that allowing stablecoins to share yield threatens community banks, it feels thin to me. Banks paid 0.01% on savings during QE. Quantitative easing lasted like 14 years, right? And at the same time, these banks were earning 4% plus yield on treasuries. So stablecoins aren't going away. Wall Street and traditional finance clearly want exposure to these assets. And the smart move for banks would be to evolve and participate rather than stall the progress under the guise of consumer protection.
Ray, members of Congress, especially coming into a midterm election year, they don't want to be in the weeds on fights like this. They all want to go home. They want to re-campaign. They want to raise more money so that they can keep their jobs. But they also need to keep the lights of the government open. We're barreling towards another potential shutdown. Do we have any sense that the arguments right now are being received by Capitol Hill, or we don't even know how it's playing itself out with the actual lawmakers yet?
I personally don't know, but I think going into 2026, the legislation will be on the side of the crypto industry. It's clearly one of Trump's mandates. He's beholden to his constituents to deliver on a lot of the promises that he made to the crypto community, which lobbied pretty hard for him. So, and he's not been afraid to use his big stick in the bully pulpit. So, unless we see some sort of change and the Republicans, you know, holding the executive and legislative branches, basically they have the majority there. So unless we see some sort of change there, I think the legislation goes the way that tech desires, that Republicans desire, that Coinbase desires.
Yeah, of course, Teddy Roosevelt famously said, speak softly and carry a big stick. At least one of those two tends to be what President Trump embraces. I'm curious your general take on the price action for the crypto majors. Why are we seeing such a negative price action these last few months, despite all the regulatory progress that has been made this year?
Well, Bitcoin has had a somewhat disappointing end to 2025, but the context matters. So, on the surface, Bitcoin does look weak. We are possibly looking at closing the year down by 6%. Meanwhile, the S&P 500 and the Dow are going to basically give us double-digit gains by the end of the year. I know everyone's talking about gold, silver, and platinum. Gold's up 60% for the year, and Bitcoin is the surprise laggard. But I think what's important for investors to do is zoom out. 2025 was a structural, it was a win for Bitcoin. The spot Bitcoin ETFs absorbed $113 billion in net assets, and BTC price doubled from 68,000 to 126,000. So on November 15th, when Trump announced his candidacy for president, we saw Bitcoin trading at 68,000, and it went all the way to 127,000 by October. So I think really, the takeaway for the year is that markets are more liquid. Bitcoin's ownership is more distributed. The capital is kind of rotated to more professional and patient holders versus kind of the speculative investors that were always involved with Bitcoin. Now, of course, if you zoom out, there are a lot of non-crypto related factors which are negatively impacting Bitcoin. So some of those would be kind of like the growth in global uncertainty, the de-dollarization trade, the breakdown of multilateralism between the United States and many of its allies and foes. There's concerns about inflation being sticky in the US and globally. There's geopolitical tensions coming from Russia and from China due to the border expansion. So I think this kind of me first global environment doesn't inspire confidence from traders, but it does create opportunities.
Ray Salmond is the head of markets for Cointelegraph. I hope you'll rejoin us after the new year because it's shaping up to be yet another busy one for the broader landscape and crypto blockchain ecosystem at large. We have to leave things there because we got an opening bell, Ray. I don't know if you've heard, the bell waits for no one. Thank you for being here. Happy New Year, Ray. Thank you.
Happy New Year.